And today we're going to be talking about mortgages, the pre-approval process. Are pre-approvals important? Are they worth the paper they're written on? So let's get into it. That's today's topic. And welcome back. I'm Harpreet, your favorite real estate broker. And this is another episode of HSR Talk. So once again, we're back in the car today. I'm on my way to a focus group that I've been invited to on the real estate industry. So that's what I'm up to today. But as I was heading there, I thought, let me record something about the pre-approval process. Lately, we've been getting some questions as many more of you are kind of showing interest in getting back into the market. And what is a pre-approval? Why is it important? Why do you need to get it? So that's what we're going to get into. There's different types of pre-approvals. In my 10 plus years of being in the business, I've kind of seen it all. So you can go to your bank. Let's start with that. If you go to your bank and you get a mortgage pre-approval, most banks are going to ask you for some documentation around your income, and they'll pull your credit, and they will issue you a amount. This is something that you would qualify for. I'm not saying you qualify for it. You would qualify for it if you meet a bunch of criteria they've outlined. And sometimes they'll call this a rate hold. So you can lock in your interest rate for a certain period, and pre-approval is, up to a certain amount. So that is one way when you go to your bank, and each bank is different. They might call it something different, and you might start online, but typically you're going to have to speak with a mortgage advisor. So a mortgage advisor at the bank. They're not mortgage agents. They're not mortgage brokers. They're advisors. So that's typically one option many people consider is they're going to go to the bank they have a relationship with, the bank where they bank at, and they are going to go in and get a mortgage pre-approval. That's option one. Option two is to use a mortgage broker. And a mortgage broker essentially is like an independent mortgage agent. They're registered, they're licensed, they're regulated, so they have training and they have rules and ethical obligations they have to follow. B, they're going to have relationships with a variety of lenders. So it's not just one bank they work with. They're going to have relationships, they're going to have options to basically shop you around, and they're going to know the different programs each lender offers. So not only the big banks, they'll have access to the B lenders or, credit unions, alternative lenders. And if A lenders, B lenders don't work for you, they'll also have an option of private lenders, depending on if that's something you're looking for. But they're going to be able to educate you on all of the options available to you. And essentially, let's say you're self-employed, you're an entrepreneur, maybe you're a doctor, you're a lawyer, and you don't fall into just getting a regular paycheck. And maybe you're a consultant, so the way you earn money might be different than how people with normal jobs earn money. So they're going to be able to recommend to you which lenders have the best program for the type of work you do. So I know if you're a doctor, there's specialized plans. If you're a brand new doctor, you just become a doctor, you just become a lawyer, there's banks that have specialized programs for those fields. And that's what the broker is going to be able to do is they're going to know about all of the options out there. And next, B is they're going to be able to recommend to you the best one for your situation. So that is one thing a broker is going to do. The other thing a broker is going to do is they're going to have, a mortgage application essentially, or a pre-approval application. And typically it's a form. Many of them have it online. They'll send it to you digitally, and you're going to fill it out. And you're going to share with them your financial details, your personal details, so they can go ahead and verify your income. They will pull your credit. They will do all of that. If they do all of that, they pull your credit, they verify your employment, they will give you a mortgage pre-approved. And you want it in writing. So in doing this for a long time, I have experience where clients have come back to me and said, well, I didn't get it in writing, but they told me verbally. So let's talk about that here as well. There's a verbal pre-approval, and then there's a pre-approval in writing. To me, if it's not in writing, I don't see the value in it. So if you've been told verbally, hey, yeah, no problem, we can get you a mortgage up to this amount, it's not a problem, we need X amount of days. In my experience, that's been a red flag. That's been a red flag, as all of the proper due diligence has not been done. And then there's the pre-approvals where all of your documentation's brought in and everything's verified, and you're issued a pre-approval that you will qualify up to this amount. And I'm not going to get technical, but they're looking at your ratios, they're looking at your monthly obligations, they're looking at your debt, they're looking at everything to see what you would qualify for. But also what a broker can do is educate you. So maybe you need to pay off, a line of credit, a student loan, a credit card, and it would actually help you qualify for more. These are things they're going to be able to educate you on when they look at the whole picture. Now, we have a pre-approval in writing. Does that guarantee that you will get a mortgage for that amount? No. So let's just say you've been pre-approved for $850,000. You've been told, go out, buy a house, but up to $850,000, no more than $850,000. If you have a financing condition, we are going to need 5 days, 3 days, 7 days to get you an actual commitment. So this is where this new word comes in, commitment, and we'll talk about that. And you go out and do that. And now, within those days, just because you're qualified doesn't mean the house or the property itself is qualified to the lender's specification. So one thing lenders like to do is some form of appraisal. And all that means is they want to verify that the house they're lending money on is worth what you say it's worth. So if you tell them, hey, this property is worth, well, I'm paying $850,000, what they want to do is get an independent verification of the value of that home. So if the appraisal comes in at $850,000, what you've paid, hey, and everything else checks out, you're going to get a mortgage commitment. But sometimes it doesn't appraise for what you paid, and that can happen in a shifting market. So let's say this home, you've signed an agreement of purchase and sale for $850,000, and the appraisal comes in at $750,000. So the bank can only commit to lending you up to that amount. And what a broker can sometimes do is ask for another appraisal. Maybe there was an issue with the appraisal. Maybe the appraiser missed something about the home. So sometimes what they can do is they can get another appraisal done. Or now the bank's saying, we'll give you up to $750,000. And if you have that financing condition in the agreement, well, you have a choice to make. Are you able to come up with the difference? So in this case, are you able to come up with another $100,000? So this way, the bank is going to lend on $750,000. Or what a broker can do is they can offer you alternatives here, right? They might be able to get you the $100,000, and the bank might allow you to actually, get $100,000 from another source. And this is what the broker is going to work on. They're going to make sure that all of this can happen. Is it possible? Is it feasible? What are the costs? And that's typically how this works. So now the question is, well, if the pre-approval, and even if it's in writing, is only an approval of you as the person, it's not an approval of the property, and we actually need the property to also be verified, is it worth getting a pre-approval, or should you just wait until you find a home and make it conditional on financing, and then go take it to a mortgage broker. I personally believe it's valuable to go out and speak with a mortgage broker to discuss your options, get a pre-approval, have them take a look at all of your information, do the due diligence, and they'll call it underwriting. They'll do the underwriting of the deal and of you and see what you're going to qualify for, because they can give you the full picture. They might, suggest some things that you need to fix on your credit or with your finances, or they might say, well, I understand the area you want to buy a home in. It's, $1 million. You only qualify for up to $850,000. So what you could do is, if actually you find a home with a legal second unit that brings in a certain amount of income, well, you would actually qualify for that home. So now we have that information. If we can find you a home with a second unit, you're able to qualify for more. So we wouldn't have this information. We would just be guessing and taking a risk without having a conversation with the mortgage broker. Those are the reasons I find it's very actually beneficial for you to go out and get a pre-approval, speak with the mortgage broker, discuss your options. Make sense? And now, pre-approvals from the bank, sometimes they can be helpful. They can be great to hold a rate, but mortgage brokers can do that for you. So obviously, if you haven't kind of caught the drift, I'm always going to suggest that you speak with a mortgage broker, and especially a mortgage broker who wants to try to, tight spot here. Especially, I'm going to suggest you, shop around, talk to someone that can give you the right advice based off of what you need, and especially for the type of property you're looking for. So now if you're looking for a commercial property, I'm not going to suggest you go speak with a residential advisor. So I'm trying to park here. So this is real HSR talk as we navigate a parking lot. But there we go. Now,
let me just bring it all back together. I'm going to suggest you always speak to a mortgage broker. And what we'll do is we'll suggest to you a number of mortgage brokers. So maybe you want to meet someone local to you. You want to meet them in person. Maybe you're looking for someone that can help you virtually. You don't have time. You're really busy. So you want someone that can handle everything virtually. We're going to recommend to you people that we've worked with, that we've trusted and our clients have trusted. And we'll actually encourage you to kind of interview them. Figure out who fits you and your style best. One thing about us at the HSR team is we don't take kickbacks. We don't take kickbacks from mortgage brokers or any third party that we work with. At the end of the day, we want what's best for you. And some mortgage brokers, actually, lawyers, they offer kickbacks. They'll offer us $500, $1,000, etc. And what I'll tell them is pass the savings on to our clients. So that's something I personally and at the HSR team we do, is we do not take those kickbacks from third parties. So you can be assured when we recommend someone to you, it's completely unbiased. Now, if you have questions about mortgages, or you want me to connect you with a mortgage broker or give you a number of mortgage brokers to research, you can always send me an email, harpreet@hsr.team, or send me a message on Instagram at soldbyharp. So that's today's episode. Mortgage pre-approvals. Are they worth it? Should you get one? And are they worth the paper they're written on? Until next time. And by the way, if you're listening to this on Spotify, I'd really encourage if you could hit follow, leave a rating, leave your honest rating, and also even a comment, or on Apple Podcasts if you could do the same. And if you're on YouTube, you're watching this, please hit subscribe, leave a comment, leave a like. It really, really does help. Thank you.